Good morning. My name is Michael Naidrich, and I am the co-CEO of AmeriVet Securities. And today we have a special day here. I have my usual partner in crime, all things Fed rates and liquidity, CFA, Gregory Faranello. And with us is our head of IG trading, Steve Haas. So Haas, welcome to the team today.
Yeah, thanks.
Uh,
Welcome. Happy to be here.
Thank you, man. Really good to have you. It's nice to have a little triangle of AmeriVet here today. Look, let's get right into it. It's a busy time. There's a lot going on. We went from six potential cuts to somewhere now, maybe two, maybe one, maybe none. A lot of data dependency. Seems like every economic indicator, Greg, has the Fed doing some talk or back talk or retalk. So you know what? Let's do what we always do here. Let's kick it right to you to get a sort of an overview of what we're looking at tomorrow and what's the key points for you.
Yeah, I mean, look, it's an amazing period of time. I think Chair Powell set the stage in late 2023. Markets, obviously, in the first quarter took advantage of that. Even today, we get the ECI print 1.2 versus 1, which points to wages right now. So inflation has come back. It's definitely part of the narrative. I think from the chair's perspective tomorrow, look, there's going to be no change in formal interest rates, but certainly I think markets are going to be paying very close attention to what he says. And look, I don't. He made a pivot in late 2023. He's kind of made a pivot here back the other way to be a little bit more hawkish. So I don't see any possible way that he goes back the other way. He's got to stay straight and narrow, stick to the narrative of what they've said in between meetings, which is interesting. Chicago Fed President Goolsbee came out and said the Fed needs to recalibrate here a little bit. He has been the most dovish Fed member on that committee. So that's what we're expecting tomorrow. Mike, I'm going to throw it back to you. I know you and Mercedes have been out on the road and talking to clients. I'd love to hear what a client's saying right now
Yeah,
about
yeah,
rates.
yeah, Greg, I'll tell you, I think what we see, and as you know, Mercedes and I are road warriors, and we've been on the road basically since the beginning of the year, seeing clients in all different locations, all different sectors. I would say this, I hear the word opportunistic a lot, and I think we saw that in the first quarter. I think a lot of corporations and utilities front loaded a little bit here in the first quarter based off of some of the comments that you were alluding to when Chairman Powell gave them the window. I think now there's a lot of wait and see. And I think people have come to the realization that, rates may not be going lower here for a little while. And, very tricky. I think people are very concerned about geopolitical events. It comes up in every single one of our meetings. And, thank God we have a role to play with that with our advisory board and some of the other members of our board. But I think also people are worried about, where rates are, although they believe this Fed is very independent, we are up against an election, and that has, some different types of consequences. So I think people are really trying to figure it out. I think people are comfortable maybe where rates are. They just don't know how to figure out whether they're going lower and if they're going lower. What we tell them, and maybe this is a good pivot over to Haas, Steve Haas, is the market is wide open for those who come. And, a perfect example is Boeing came out yesterday and, they think they had 125 million out there, excuse me, 125 billion to price 10 billion. So, Haas, we keep telling them it's wide open. Our clients have been steadfast in their support of the credit markets. What are you seeing on your desk?
Yeah, so April's really all been about how credit has reacted to higher rates. We've seen a 2 to 10 basis point spread tightening in the month of April, and that's really all on the heels of higher rates. From a secondary trading perspective, we've seen 6.5 billion of net client buying, which was led by financials, energy, and industrials. And then utilities, technology, and healthcare are all seeing net clients selling. When you break that down on the curve, we've seen net client buying in the front end of the market in the 3 to 7 year, 0 to 1 year, and 1 to 3 year maturities. And then in the back end of the curve, we've seen net clients selling. So when you break that down and you kind of look at it, it's, an investor base that is putting money into the front end of the curve, kind of in a safe haven trade, as we've seen, a jump up and a spike in rates. from a new issue perspective, we've had a solid start to the new year. We're up 37% year over year. And January, February, and March all exceeded expectations. And right now, April is sitting right on top of expectations at 100 billion. I would say it potentially might have been a lighter month, but expectations were 100 billion and we're right there. I think, there's a potential that we may have seen a little bit more, but as we got a kind of a spike up in rates, I think, may have a client and investor base that may be sitting on their hands. We've definitely seen a shift as clients push maturities a little bit on the shorter spectrum than maybe out the curve in the 30-year paper. But with the higher rates, there's definitely an opportunity for people to be looking at great yields. And I think that's been super positive for the market. It'll be really interesting to see how everything unfolds over the next few months in credit. And that's what we'll be focused on.
Hey, Haas, that's great. And let me ask you a question about April. April's been an interesting month. So I think obviously the data suggests that we've been up a lot in the first 3 months, and I think there were some big M&A transactions in that might have skewed that number. But I do think obviously the data is what the data is. In April, it's really been interesting to me because the exception of maybe an Amex print and this Boeing print that was pretty outsized that I think came out of more of the news cycle than maybe what they had planned to do originally. If you take away the banks, not that much issuance out there in April.
Yeah, and it's spot on as far as expectations. I think, it's always interesting to see, how laser focused these expectations are, and we're right on top of them. Bank of America didn't come to market with, potentially thought they could have come with, maybe a 10 or a $12 billion deal, and that might have, brought things up. But always tough when you have a month in which you've got earnings coming out, and you never know when guys are coming out of their blackout periods where they want to be. But specifically, the spike up in rates, I think, is, definitely got guys, looking at the market and trying to figure out where they want to invest on the curve.
Yeah, it makes a lot of sense. And maybe this is a good time to transition back to you, Greg. Maybe you can kind of put together a little bit of what Steve is talking about, Haas is talking about, what I'm talking about out on the road, and kind of tie it in all together for our clients on what's making sense here.
Yeah, no, I mean, look, financial conditions are very, very loose here. Market-based financial conditions. I think a big part of that is the credit markets. The credit markets have done extremely well up until now. I think a big part of that is optimism that the economy is doing well. So at the same time that we have higher rates, and I do think this neutral rate is higher, the economy has done very, very well. We don't know what that's going to look going forward. GDP last week, obviously 1.6, but a lot of that was external, not internal. I think Jay Powell is in a place right now where he's going to sit tight. I don't think the Fed wants to tighten further from here at all. There is definitely damage, I think, to regional bank and big bank balance sheets at this point. I think he will sit here, and what I do expect from him tomorrow is a story of, look, if we need to do more, we'll do more. But at this given juncture, we're here, we're holding tight, and if anything, if we need to go lower, we can.
Yeah, thanks, Greg. I got to tell you, I'm in the camp of, it's okay if we just stay here and don't go higher, don't go lower, and just kind of, just get comfortable where we are. Haas, maybe I'll give you the last word. What are we looking for in May as far as expectations of issuance sizes? If you can just share that with our clients.
Yeah, I think we're probably hopefully right around 120 billion. Haven't seen anything out of the usual spots where we get that information, but I think 120 billion is probably realistic coming out of earnings period.
All right. Well, guys, thank you both as always, Greg. You know how much I love doing this. Haas, it's been a treat having you, making it a complete AmeriVet team today. For our clients, if you have any questions for Greg, obviously he is always fully available. Haas is also available if you want to know anything about the day-to-day markets, and our team is standing by to be helpful in any way that we can. We wish everyone a continued good start to the year, and look forward to hearing to you all soon. Thank you.